Hey guys, Dr. Tom Carr here of drstocks.com, drstoxx.com. Hey, we've got a lot to talk about tonight. I want to look at the S&P 500 and gold and a couple of other charts. Before I do that, I just want to remind you, we're celebrating here at drstocks.com our 15th year anniversary. We started way back in 2002. We're in our 15th year now. And I'm so excited about this. For the first time ever, I'm offering everyone a free trial, free monthly trial. Sign up for any one of our monthly subscriptions to any of our newsletters. Sign up for all of them if you want, and you'll pay nothing for the first 30 days. Use the coupon code free trial, all one word, all caps, when you sign out at discount. Go to our site, drstocks.com, click the subscribe button, and sign up for those letters. This is only good for the month of October. All right, let's get to some charts. Hey, the S&P 500 gapped down this morning, and it looked like it was really going to be a disastrous day, but then it it traded back up into the close, almost went green for the day, not quite. This is just a continuation of the kind of trading we've seen over the last few weeks. I wanted to point out on this chart, back here, February into March. March was a huge up month. April sort of peaked out, then started to trail off into the middle of May, way back up again in early June, back down into early July. July was a huge ramp up. And then in the middle of July, we got into this very flat range. We're almost 3 months now of this completely flat, very trendless trading. Now, this makes for a very difficult trading environment. And it has been difficult over the last several months. My own account, my own personal account, peaked in early August when we hit this high up here, and it's just been a slow, steady pullback ever since. We've had a few up days. We got a little bit of back in early September, but then we gave some of that back in latter September. It's just been a difficult time to trade. Not without making profits, but you've got to keep a very short time span. You've got to keep a short leash on your losses. And don't let your winners run. That's usually what I'd say, let your winners run. But in this kind of environment, you want to take profits early as well. Always trade the best setups, be very selective, keep a lot in cash. Those are the kind of things that you want to do in this kind of environment. When we're back here in this kind of thing where we're trending, several weeks at a time in the same direction, then you can let your winners run and make your stops a bit wider, and it's just a lot easier sort of trading. The kind of trading lets you sleep well at night, and good money can be made back then. We'll get into that kind of a market, I'm sure, soon enough, probably after the election. But until then, again, tight stops, quick profits, and you're good to go. All right, let's look at the S&P 500. This is a chart I posted on social media sites, and do follow me if you can on Twitter, StockTwits, and Facebook. We're looking here at what the S&P did as of today's close. You can see those 3 periods of flatness that I marked out in the previous chart. We're getting a little more volatility here in September, October, but it's still relatively trendless. We're just up one day, down the next, and we're not getting much of a trend. Today we did hit a double bottom right around the 211 mark on the S&P 500. That's a spider, SPY. And we're starting to see a little bit of bullish divergence in the RSI indicator, the MACD, the on-balance volume, and down here the slow stochastics. Just very modest bullish divergence, not really a whole lot to get excited about. But what is exciting is that the market gapped down to about 212, traded down to tag 211, which was previous support, and then traded back up to above 213, where it closed just a bit off the highs. That's a good bullish candlestick. Volume was decent, not too bad, but still on the bearish side. I suggest that we're going to see a couple more days of follow-through, perhaps, as we get back into this range. I don't see this trading range here more or less being broken until the election. Or at least until we get closer to the elections. I think we're just going to be bouncing back and forth on the spiders between about 216 and 211. 211 on the low side, 216 on the high side. That's not exciting news, but it is what it is. And again, you can't make the market do what it's going to do. It has a mind of its own. One of the trades I got our subscribers to the ETF trend letter into a couple days ago was NUGT, which is the the ETF that follows the gold miners index. We got in around 1180 or so, and moved very nicely today. Now this is an outdated chart, but it doesn't show today's move. Today has a nice up move. It finished at around 1260, I think it was, at the close. We have here a falling wedge as it's getting narrower and narrower. This is a deep cut low, so we're looking for a modest bounce from here. I'm not too excited about gold longer term, but I do think that this is a nice bounce chart. We've got some good bullish volume going on down here as well, suggesting people are buying the lows. By the way, important point to note here, and that is that there's a misconception that as interest rates rise, gold tends to fall. And a lot of people are bearish gold because they feel the Fed is going to start raising rates in December, most likely. Hey, historical figures show that that correlation is absolutely insignificant. There is no direct correlation between rising rates and falling gold. In fact, the strongest rallies in gold, for example, the 70s, 1970s, strongest rallies in gold took place when the interest rates were rising and high. And gold tends to fall when interest rates fall. Go figure that. The correlation is only about 28%. If you're a statistician, you know that's next to nothing. So don't be afraid of buying gold because you think the Fed is going to raise rates. That has no effect. Gold is, like any commodity, a product of supply and demand. And it's going to trade on that account, not what the Fed is doing. So just ignore that correlation. That's an old myth, wives' tale. Don't need to worry about it. One chart that I also like is a Chinese internet stock. If I can find it here. Here we go. It's SINA, which is a kind of like the Chinese Yahoo, I suspect. It's sort of a portal, media portal for news and other kinds of things. This is the weekly chart of SINA. You can see that it had a huge thrust up after setting a low back in April of 2015, and it's been in a nice steady uptrend ever since then. It tagged a lot of lows down here on the bottom. We've got a 2 to 3 tag resistance line, and then we have this perfectly formed bullish bull flag. Sorry, can't think of my terminology here. That is very much on the verge of breaking out to the upside. I see SINA, once it breaks out of this flag, heading up to about the mid-80s, maybe 90 from here on the short term. And if you were able to hold for several months at a time, you might see this go all the way to the low hundreds. So this is a nice bullish chart to focus on. And I think I've got one more to show you. Yes, the chart of LABO, which is the biotech index, all the biotech stocks, and this is the 3 times leveraged bullish version of the biotech index. And you've got a number of things going on here. First of all, we do have a very broad range uptrend, which is fairly clearly defined with some lows and highs, and we're right in the middle of that. You might suspect that with momentum being what it is, it's going to travel all the way down to the lower support line, and that is a concern. But short term, we are very oversold. We have 2 candlesticks now below the lower Bollinger Band. We're oversold on the RSI indicator. On balance volume, which is a leading indicator, is still fairly bullish. It has not trailed off very far. MACD has just tagged below the 0 line, but it hasn't gone that far either. And so I'm suspecting that, especially with today's reversal candle, we're going to see a nice little run up in the biotech index. LABO should run up to the mid 40s from here, and we'll check later to see if that comes to pass. But I'm short-term bullish LABO, longer term a bit on the bearish side. Okay, that's it for now. God bless everybody. We'll see you soon. Bye now.